All right, welcome back. So today's class is going to be a little bit longer, so I will plead with you to be very, very patient. The reason is this: what is happening in the financial market right now need a very serious, close attention as an investor. So if you really want to make profit and grow your wealth, build your wealth over time and make sure that you are not falling victim of the market, instead taking the right opportunities in the market, I will need you to pay good attention, because in this video I'm going to be visiting a lot of platforms to be able to correlate what is happening in the market and also give you my best options, my best advice, and my best opinion on how you should be able to manage your portfolio. Now let's go. Now, first and foremost, what is that major thing that drives your hunger, your curiosity to step into the market? What do you look out for? What are those platforms, or what are the indicators that tells you, okay, it is time? Because for you to be an investor, something must drive your hunger to say you want to invest. And when you are investing, what are the confidence, what are the assurance that you have that where you are putting your money has future to bring you maximum returns? So for me, first, I always go to this fear and greed index. Why? Because fear and greed index will always show you the behavior, what is driving the sentiments of investors at a particular time in the market. So you can see these dots. This indicator or this index will always show you if investors are fearful, or if they are experiencing extreme fear, or they are neutral, or they are greed or extreme greed. So what this explains to you is that at a given time, either investors are selling off because they are experiencing, or they are nursing some level of fear as a result of either a geographical tension, or probably market reaction, or just the media, momentarily upside and downside. However it is, these are one of the things that fear and greed index will also help you to decide. It shows you the direction and of course what is happening in the market. So if I go to crypto, because this always gauges both stock and the crypto in the financial market, you can see on crypto it is almost very close to extreme fear, but at the moment it shows that there is a huge decline in the crypto market. And then also in the stock market there is also a decline, but the number is quite different. The points, if you come here right now, you can see that in June 25, you see it was also showing fear, but the point is quite different. This is 25 points, but right now we're experiencing 34 points. So always guide yourself, and if you watch down here on the days or the dates, you will always see the difference. So once I come here, I will know that either investors are selling off, because once investors are selling off their shares as a result of fear in the market, you know that the price of stocks are also going downward, either for a pullback or just a normal panic, because these are the things that you will always see. So after I check on this, I will also go ahead and then and check before I come to the private investing platform. I always go to the earnings platform to know what is driving the earning report, the activities, the events as it goes. And this is nasdaq.com. I'm using nasdaq.com to check the earnings, because if we are having more of earning report in a particular month, it also drive down the stock prices. The reason is this: once stocks, especially the big tech companies, once they release their earning report, most likely you will see a drop down immediately after the earning report. I really don't know why it happens like that. Even when some stock will report a very good earning report, either the revenue or the on their capex or their net income and all that, once they release their earning report, there's always some level of significant pullback before they balance upward. So I don't know, maybe if you know, you can let me know down in the comment section, because we are here to learn. As I'm sharing my opinion, how I feel, how I understand the market, you can also help me to understand how you also understand the market. So yesterday, which is 29th of July, you see a lot of report, a lot of earning report from different companies. We saw Meta and of course Microsoft. Yes, Microsoft reported a very resounding earning report, and for Microsoft, after the earning report, the stock price actually went up. That is the after the market closed, it went up. But for Meta reported a very poorly net income report, even though the earning, that is the revenue, was very promising, but the net income was too poor. Yes, the net income was too poor. So that would take me to Yahoo Finance. I will use Yahoo Finance to also visualize this market. You can see immediately after, this is pre-market now, we've just entered pre-market, but before pre-market, after the earning report of last night, the stock price dropped down to even almost minus 9%. That is not a good one for retail investors. That is not good, because I saw something in the earning report of Meta. You can see Meta's second quarter of 2026 results revealed a 14% drop in net income. Mind you, in net income, to $15.8 billion, despite a 28% revenue increase. So the revenue, it has much of revenue increase, up to $60 billion rise cost, particularly in AI infrastructure. So now what this means is that Meta is actually, investing more money or spending more money on AI infrastructure. And for those who have been following very closely, Meta has, consistently said that he believes in the future of AI, and so he's investing heavily in AI. So if you go back to the let's see the full breakdown, because the CAPEX actually shows that he invested more. So I will take it up from here. Earnings overview. Meta second quarter results highlighted a 28% revenue increase, but a 14% decline in net income. So there is no much of profit, because everything they earned, all the revenue, they went back to go and spend more on their CAPEX, that is capital expenditure, largely due to rising operational costs. That is it. That is the CAPEX. So you must understand all this, and then Mark emphasized the need for proprietary AI models, suggesting that the reliance on one source and open source models poses strategic risk, so that you can understand. So this has actually poised his hunger to continue to invest in infrastructure and probably building their own AI infrastructure, so that they don't just only depend on one particular open source and all that. So for me, and if you come down to EPS, and of course EPS, there was no good report coming out from there, and Meta raised its capital expenditure forecast for 2026. That is, for me, is not actually an encouraging one, but then we are going to apply the value investing strategy to be able to utilize this opportunity. So for that, like 130 to 145 billion dollar is it going to be invested in the build of AI infrastructure. And one thing I love about Meta, that is Facebook, is that it is a well-structured company, and if you check their fundamentals, it has been doing well. Apart from these capex, that is the capital expenditure, which they have been investing hugely. So, for those who believe in AI, if you believe the existence of AI or continuation of AI infrastructure and all that, you just need to invest. It's an opportunity for you to buy. But if you feel that AI is something that is going to hit on bubble, of course you will see this Meta revenue as let's say as a trap. Do you understand that? So, having said that, okay, so why I do this, let us also visualize 1 year after, or based on months and all that, how Facebook has been performing. You can see on the chart right here, Facebook has been up and down. There has not been any meaningful stability on the upside. And then 1 year ago, you can see it has actually been running around the same line. And 5 years down the line, you will always see that yes, this company has done continue to do well. 63% in 5 years. 63% in 5 years. So this is not actually what most investors, retail investors, are looking forward to, because 1 year, on the analysis of 1 year, it is minus, it is down 16%. So this is for Meta platform. And then for Microsoft, yes, let's see what Microsoft did yesterday, because both companies, they actually released their annual report yesterday, and one did absolutely well while one did not do well. You can see that this is over 9% upside, 9% upside after their annual report. And from this forecast here, you can see in the fourth quarter of 2026, Microsoft annual report showcased record revenue of $90 billion and an 18% increase year over year, driven by robust cloud performance. That is their Azure. Yes, it is Microsoft that owns Azure cloud services. So these have been doing a lot of revenue for Microsoft, because it is their enterprise services. A lot of people have been utilizing that. The company also provided a strong forecast for the first quarter of 2027, prompting an 8% surge in stock price post results. So we look forward to Microsoft doing, in fact, even more than what it has done in this 2026. So because once you see this is fourth quarter of 2026. Don't forget that the investing cycle, the market cycle of each company depends on when they start their own. Microsoft always start prior the previous year. So now, as we start this from now to December, Microsoft would have entered 2027, the first quarter of the next investing market cycle. So that is how it is for other companies, either the second quarter or their first quarter, depending on how their businesses are being structured. So I look forward to seeing Microsoft, in fact, doing absolutely well, because now every of these companies, they are deploying the services of AI, and they are investing heavily into it. So that is that. Then again, I will also use the private investing platform to showcase some of the things that we'll be looking forward to in the coming days or in the coming months. Now, for those who have large sum of money, there's something that you must understand. The rich, they make money in the secret. They don't make money in the open. They don't make money, under the influence of distractions. What we call distraction is noise, like all those 1 minute or 24 hours news that affect the stock price, and then the next day you see it booming back. That is not what the rich or the wealthy will always do. They come to the private market, and I have this platform where I help a lot of investors to buy shares before the IPO. Before the IPO, this is Perplexity. We're also looking forward to Anthropic and OpenAI. These are companies that are coming forth into the market place. So you should also prepare yourself in case you want to take that opportunity. Of course, we have a significant that is the limit order on through which you could be able to buy any of these stocks. So I'm actually looking forward to IPOs. Okay, good. So these are some of the stocks that are still in the private market. You have Kraken. I've been following that. This is a Kraken. I've been following Kraken. Yes, I've been following Kraken. And so if you want to buy stock in the private market before the IPO, this is where we do those things. This is where we do that, because investors want where they will put their money in no distance time. They make more money, and that is the essence of the financial market. Do you understand? That is the essence of the financial market. If you are in the financial market for sentimental or emotional business or investing, then you will not make money. So we look forward to the seven magnificent. We will call them seven magnificent because they are almost their market value, or their capex, that is the market capitalization, is almost the same into $1 trillion, $1 billion. So that is why you see them here. Number one along the list is OpenAI. You have the Anduril, you have Anthropic, you have Databricks, you have Stripe. A lot of people have been using Stripe because it's a fintech. A lot of people have been using Stripe. So you too, you want to go into this kind of stocks, you want to buy any of them, this is where you see them. You see the prices. The prices are always different, of course, because sometimes when an IPO is being announced, if a stock is trading in the private market, for instance, if it's like $16, on the IPO expected to skyrocket to even $30. So the private investors will even make their money within seconds. Do you understand? So private investors, they put their money, while the company, they use their money to be able to build on the company, the product and all that. So on the IPO, don't expect the private investors to keep on watching you. Of course, there's a timeline. There's always a timeline. Probably you invested to allow your investment to last for like 6 months on the IPO, or 1 year, as the case may be, depending on the policy, or depending on the terms and conditions of the company. So, but however it is, as a private investor, you make more money once the IPO comes up. Some persons don't even wait on the IPO until the IPO. You still make your good money. So if you want to start making money from investing in the private market before the IPO, then hit me on the comment section. You can also message me on WhatsApp. Yes, and again, don't forget, if today is just the first time you are coming across my video, like I said, just be patient. This video is a little bit longer, but I'm showing a lot of valuables, a lot of metrics that can help you to decide how to invest. You don't rush. Settle down. To make sure you like and subscribe to this channel. At any time you come here, you will always get value, because that is what we do. So while we are playing around this market and seeing what people can get, what is going on in the market, what you can benefit, the knowledge that you need, this is where you can start doing that. Do you get it? Yes. And again, I love this private market because it helps me also to see some of the investors, especially the institutional investors in a particular company. Because once I see that, it gives me confidence. Because if I'm just a retail investor, individually investing, I want to see stronger institutions that are investing in that same company. Because investment has to do with your psychology. How much do you believe in that company? What do you think about the company? Do you think they will go up or they will go down, or there's no future for the company? So all these things helps you. So when you see the kind of company, the kind of businesses that are investing in a particular company, you'll be able to understand. This is OpenAI. You can see Amazon is there, Nvidia is there, SoftBank. A lot of these big tech companies are investing there, even Microsoft. Do you understand that? So for me, if I'm investing into OpenAI, I have backup. If my little money that I'm putting is there, why should I be scared when some companies like Amazon, Nvidia, so they must have done their due diligence with their high ranking analysts, must have done that before they also start to invest in that company. So once again, these are the platforms that we always follow. And now again, I want to also show you from this is also my option trading platform, Robinhood. Not everybody, especially those who are in Africa, you don't have access to using this platform because they are not they don't give that region that access to this. So if you are in UK, you can use Robinhood. US, Canada, Australia, all these places you can use it. But if you are in Africa, yours is limited. You can use some other platforms to be able to do that. So I will come here to say, all right, so one other thing I need you to do is this: before you start investing, how do you screen the market to know the kind of companies that are already moving upside that you can invest in? But before I use the screeners to do that, I need you to also watch from this my open screener. You can see some of the stocks, the analyst rating is also showing me here. So I always look out for strong buy. I don't just use the ordinary buys to decide to buy a particular stock. So if you scroll down here, you will always see the ones that are showing you strong buy. You always mark them down so that when you are doing your analysis or your technical analysis or your fundamental analysis, you focus on those ones. You don't spend your time watching all these ones that are neutral or the ones that will tell you sell off. You get it now? So these are the things I always do every blessed day to give my investors or my followers the best analysis and option for their money. Yes, you can see right here now they're even telling you to sell off these. Yeah, SanDisk is already showing us a buy, not strong buy for the now, because there's a lot of significant pullback. This is Uber. Uber is significantly cheap right away. But if we do the analysis, you see Uber right now on the PE ratio 17.74, and this is the price, $71. If you divide this by this, you see that Uber is significantly cheap compared to other companies in the market like Lyft and all that. So I love it when I come here to check the analyst rating and also the EP. That means the PE, that is the PE, the price to earnings ratio and all that. So always do this every time that you want to start investing before you jump in. Don't invest blindly. Take your time. Sometimes you could take up to 6 months analyzing a particular company, following them up to see the behavior, the character, how they behave, how the changes occur, all the these are the things that you must always follow, so that by the time you invest, even if you invest today and the stock price begin to decline, you would not be moved. Do you understand? You would not be moved. Having done your due diligence, your fundamentals are all intact, then you don't have anything to worry about. This is now. I love this. I love now. This is 72.33 point on the PE ratio, and the price is just $115. dollars. So it's already picking up. So on the other hand, how do you screen the market to be able to know how you want to start your investment? So let me come here. We'll come here. This button right here shows you the screener. This is the screener. So I'm going to click on this button here. So I'm using TradingView to do this analysis right now. This is the screener. So once I click on this screener, the first thing I will always do is to go to the index. I'll come to the index and choose S&P 500. I'm choosing S&P 500. Why do I choose S&P 500? Because it covers, in fact, virtually all the big companies in the United States. Yes, all the big companies. When we say in the United States, it doesn't mean that all the companies are resided or domiciled in the United States. But most companies, both in Asia, both in Africa, both in Europe, they come to list their company in the US market, either on NASDAQ, Dow Jones, or that of New York Stock Exchange. Any of them, they do all this. If you remember recently, you see SK Hynix, which is a South Korean company, they came to the US to list their stock, because before now nobody could buy SK Hynix, even though it's the leader of the memory chip in the world today. So I haven't checked this S&P 500. You come to this plus sign. I will take on this plus sign, and over here I will say VOL. That is to show me the average volume. So what is the average volume that I'm looking at for? So right now you can see from the screener, as I pick S&P 500, it has screened 498 symbols. That is 498 companies that is listed for me under S&P 500. So let me reduce it to the volume I'm targeting. So I always focus on 10 million companies that are trading up to 10 million shares. Up to 10 million shares. 1, 2, 3. Yes, up to 10 million shares. So I will strike that. So the moment you strike it, you see it has screened it from 400 and something companies down to 71 companies. So haven't done this. What is the next thing I do so that I can be able to screen, to visualize this company? I will click on this particular chart view. You just click on chart view. And don't forget, like I said, why you are doing all this one is for you to narrow your analysis to the best companies that you want to buy, or you want to invest in, or you want to trade on. So for the daily traders, you focus on companies that are trending upward. This is Google. Google is already trending upward, so there is good opportunity. This is Apple. Apple, the same thing. Nvidia is down, but you still have that option, although pending when the annual report will come. This is Microsoft that I just listed their annual report last night, and it's trending upward. Amazon is going to release their annual report today. Amazon and the Apple, they will be releasing their annual report today. Yes, so everyone look out for this big tech company that will be listing their annual report today. So you can go ahead and then follow up, choose the one that you want to trade on. This is Micron. I've been following Micron, but then for Micron, I think it's time for me to even buy Micron, because the analysis has been showing that it's still very, very much profitable at the moment. Yes, very, very much profitable at the moment. If you come here, yes, so MU. All right, so you can see Micron's technologies experiencing or showcasing some level of pullback. This is just a pullback because this company, let me go and check the intrinsic value. Let me check the intrinsic value of Micron technology. So I'll come here. No, let me come to a market beat. I'll use market beat MU. MU is the symbol, because every stock that you list on the market, they have their unique symbols. So you must use their symbol, because when we are analyzing, and we just be using symbol to analyze, so you should just understand. So this is Micron Technologies right now, trading $744.43. And so I'll check the analyst forecast to see. The analyst forecast is $1,268.93. Has it touched this particular price before now, before the pullback? If it has, let's check it. Let's see if Micron has touched this particular price. I'll come to Yahoo Finance to do this, and then I'm just taking my time. So please, I know this video is a little bit long, but be patient because it's something that is going to help you. We don't invest blindly. We try to exhaust every metrics to analyze a company before we step into buying them. So let me go back to 1 month ago. How much was this particular stock? What's the highest that it touched? It touched 1,100, so almost close to the 1,002. So over here it touched $1,240.43, and then the intrinsic value is 1,260. So it has gotten to 1,268. Almost to the intrinsic value, but it hasn't done that. And so currently it's trading what? It's trading below the intrinsic value. And I'll come here to check also the current forecast. The current forecast is that Micron is positioned for a strong purchase, for a strong buy. So for anyone that want to buy any stock like this, you look at these fundamentals, and then you'll be able to see the direction, the moving trend, and then the sentiment in the market to determine how you buy those stocks. Because once you experience this kind of pullback, is it a negative one or is an opportunity? For me, it's an opportunity, and that is what I'm telling you. For me, it's an opportunity. You too can also apply that opportunity to buy them. If you missed buying Micron when it was $100, or when it was $150 or $200 or $400, this is another opportunity, because don't expect Microns to go back to because a lot of people will be very funny, from the analysis. If you're expecting Micron to go back to $400 before you buy it, I think it is just like expecting the head of a camel to go through the needle. Of course, you will know that these are analyses that cannot possibly happen. I'm not saying that it may not, but it may not possibly happen even in the current dispensation. Not even when Micron is positioned at a very strong point when it comes to data memory space. Yes, you will not expect that. Otherwise, you'll be seeing it going up forward. So these are one of the things that we look out for. So having checked all these ones, you can of course check the earnings and even the health. We're expecting Micron to release their earnings report anytime soon. This is the upcoming earnings report on the 4th. Earnings report of the 4th quarter, which will be in September. So we still have more time. But on the current, the EPS is actually a positive one. Yes, the consensus EPS, that is earning per share ratio, is already 21, and then it beat it. This is the consensus expectation, $21.39, and it ended up reporting $25.11. That is absolutely amazing. So we see this kind of thing, and it tells us the direction where we are about to put our money. So going back again to the week's expectation, the earnings, what we are expecting what we're expecting today. I'll come to earnings. Today we are expecting we're expecting. We are expecting Amazon and that of Apple. Apple, they will be releasing their earnings report today. So I'm talking about earnings. All right, so you can see this. Today is Thursday. Yesterday, Wednesday, we saw Microsoft, Meta, Procter and Gamble, ARMS, Qualcomm. You see even Robinhood, because after the earnings report, you saw Robinhood did amazingly well. Then the Fed interest rate decision was on Wednesday as well. It was absolutely amazing. They did not change the report. In fact, they did not change the interest rate. They remain unchanged, and that is another opportunity in the market. So today, what we are expecting today is Apple, Amazon. We also have some other very popular companies. These are the most two popular companies. You also have Shell. Shell PLC will be releasing their annual report today as well. So look forward. Both MasterCard is also releasing their annual report today. So it is important you follow up on all this and know how to position yourself, because we are looking for what is going to help the market to bounce up forward. These are the things that we are actually doing. On the final note, I need every one of you to always check this trading view on the code. You will always come here to know the most active companies, the small cap, the large cap, the medium cap. All these are important for you to choose when you are making your decision on how to invest into the market. So once again, I want to appreciate you for taking your time to watch this video. In as much as it is going to help you, it is also helping me, because as you watch this video, it helps me to reach large number of people on this space, and it ranks my video on YouTube. So don't forget to like and subscribe on this channel. So you want one-on-one guidance on how to invest, how to manage your portfolio, hit me on my WhatsApp or on Messenger there.